Google stock just released their latest quarter's earnings, and the stock has been up anywhere from about 3.5% to 5% in after-hour trading. And this comes after they saw beats on top and bottom lines, and the company also just announced a 5% dividend hike, which we'll be taking a closer look into. Now, there's plenty of other really good news surrounding Google stock in this earnings report, so let's go ahead and address all of it. Now, as we already know, if we look at Google year to date, they're down pretty significantly like all of big tech, down by about 16.7%. But if we look at the last 5 days now, up about 7.2%, and again after hours, up close to 4% now. And if we look at this recent earnings report, here's what we can see. Q1 GAAP earnings per share of $2.81 was a huge beat by 80 cents and revenue of $90.23 billion, which was up 12% year over year, and this was a beat by about $1 billion. Now, we need to put both of these things into perspective. If we jump over to my quarterly data sheet and come up here and plug in Google, all the data will automatically load in thanks to the ticker data add-on link in the description. Now, before we look at earnings per share, let's go ahead and look at quarterly revenue. Now, what we can see in Q4 of 2024, Google reported $96.5 billion in revenue. And if we look at this most recent earnings report, we can see it was actually a little bit lower than that, about $90.23 billion. So is this bad news? No, you have to understand the business model behind Google. Q4 is always by far their highest revenue quarter, and Q1 is always their lowest revenue quarter. So for example, you can see right here, Q4 of 2024, this outlier here, Q4 of 2023, Q4 of 2022, and Q4 of 2021. Quarter 4 is always their highest quarter because advertisers are willing to pay premium rates during the holiday season. And then after that, Q1 is typically going to be their lowest quarter. So we have to compare quarter to quarter, not necessarily to the most recent quarter. And what we can see in 2024 Q1, revenue was $80.5 billion. So revenue saw a pretty significant increase from Q1 of 2024. It went from $80 billion all the way up to $90 billion, a 12% year over year jump. If we do the exact same thing for earnings per share, with Google, we can see earnings per share in Q1 of 2024 came in at $1.91, and in this most recent quarter, we can see Q1 GAAP earnings per share came in at $2.81. So the growth is there, and the growth has been pretty solid. But there's one specific business segment that is under a lot of scrutiny for Google right now, and that's Google search revenue. And the reason behind this is obvious. The bear case for Google is that AI is going to start to cut into their market share. So let's look and see what happened to their search revenue. If we look at Q1 2024 Google search revenue, it came in at $46.2 billion, and in this most recent quarter, it came in at $50.7 billion. So it's continuing to see growth. And this was actually something they outlined in their earnings report. Google search revenue was actually up 10% year over year. This was phenomenal. This was probably the single metric that investors were most concerned about. We can also see YouTube ads up about 10% year over year, subscription platforms and devices up 19% year over year, and then a small decrease in Google Network, but that's one of the smaller business segments. So overall, operating income was up pretty significantly, but we can also see the margins got better as well, going from about 39.6% in Q1 of 2024 to 42.3% in this most recent quarter. That's a pretty significant jump. If we keep scrolling down, we can see Google Cloud revenues and operating income. Google Cloud revenue grew 28% year over year, and the margins in this area saw significant improvement. And then if we scroll down even further, like expected, capital expenditures did increase as the AI race continues to ramp up. I think a lot of people seem to forget that Google is a major player in the AI race. Now, as we move on, we can also see Google announced a dividend increase of about 5%. Now, we need to put this dividend into context. Keep in mind, if we go and jump over to my dividend breakdown sheet and plug in Google, what we can see before this recent dividend increase, the yield was very low, just 0.5%. But keep in mind, last year was the first year they actually paid out dividends. And if we look at free cash flow in 2024, free cash flow was about $72.7 billion, and the amount they paid out in dividends was only $7.3 billion. So they only used 10% of the company's free cash flow to pay out a dividend. And keep in mind, they're able to do this very easily because if we look at the company's balance sheet, come up here and plug in Google, what we can see is they're literally drowning in cash. Total assets of over $450 billion, while total debt is just $25 billion. Total current assets, $163.7 billion, while total current liabilities is just $89 billion, so a current ratio of 1.84. The company is in a phenomenal cash position. They have more cash than they know what to do with, so they simply decided to start paying out that dividend and growing it over time. Now, obviously, in the grand scheme of things, a 5% dividend increase isn't a very high dividend hike, but I think this is to be expected over the short term. Right now, the main focus is reinvesting back into the business to remain a major player in the AI race, but I think in the next 5 to 10 years, you're going to start seeing pretty high double-digit levels of dividend growth from Google. But keep in mind, along with the 5% dividend hike, the company did also authorize a $70 billion buyback program, which is really important right now because remember, buybacks are most effective when the stock price is trading below intrinsic value. If a company is buying back its own stock when the stock is overvalued, it can actually destroy shareholder value. So we'll come back and talk about valuation a little bit later, but this could be a major opportunity for Google shareholders. So what does this mean for Google? What does it mean for their valuation and the opportunity? We can even see now in after hours, they're already up 5%, so they're still climbing. Let's talk about what this means for Google stock. We'll jump over to our sensitivity analysis. And real quick, like always, if you'd like to be able to download any of my automated spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description and use code TARIF to get 30% off for the next 2 days. But we'll come over here and plug in Google stock. Now, what we're doing with our sensitivity analysis is we can see what our expected total return would be from a stock by projecting the earnings growth rate and projecting the future PE ratio. And what I was able to do is to automatically pull in with the ticker data function the average analyst estimate for earnings per share from 2025 through the year 2029. And what we can see is growth rates are relatively high when it comes to the projections for Google stock. In fact, the average analyst projection by 2029 is $15.57 in earnings per share. So on the very low end, we're talking about 9.4%, and on the high end, around 20% growth. Keep in mind, these are ticker data projections. What does Seeking Alpha analysts believe? Well, if we look at the analysts here on Seeking Alpha, what we can see is they're actually even more bullish on the earnings for Google. We can see on the low end, they're projecting about 10.5%, and on the high end, also about 20% earnings growth through the year 2029. So let's take this into account when making our EPS growth projection. Let's go with the low end of these projections and say about 11.5% earnings per share growth. So we have part one, but now we need to project our future PE ratio. What we can see for Google is the average PE ratio over the last 10 years was about 29, but we also have a huge outlier here in 2017 that can skew that. So let's remove this. We can now see the average PE ratio at about 25.88. The trailing 12 months PE ratio is now 19.45, which is 25% lower than the average PE ratio over the last 10 years. So let's just go ahead and say this isn't a best case scenario we're looking at. Let's say the PE ratio stays about where it is and is at about 20. If we project a much lower PE ratio than Google's averaged over the last 10 years and a much lower earnings per share growth projection than a lot of analysts believe, look at what happens by the year 2030. We still come to a total return of 91.36%, which would be a compounded annual return of about 11.42%. I'd argue this is not even the bull case for Google. If we bump these numbers up to around the average, maybe we think about 13.5% earnings growth and a PE ratio of maybe 22.5, so still lower than that 10-year average. Look at this, by 2030, a total return of nearly 140% and a compounded annual return of 15.67%. Now, I'd argue that the bull case for Google really hinges on 1 to 2 key points. And again, that key point number 1 is making sure Google search revenues continue to grow. And that's what they did so well in this most recent quarter, 10% year-over-year growth when it comes to Google search revenue. This was exactly what investors wanted to see. Then, of course, we do have the lawsuit, but after reading various legal documents from authors, it looks like it's unlikely any major event will happen from that. So when it comes to Google's most recent earnings report, I think this was a best case scenario for the company. And the market certainly seems to agree, as it's currently up about 5%. But go ahead and let me know what you think of this most recent earnings report from Google stock. And again, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.